Joining us again is Rick Krebs, a CPA who specializes in mergers and acquisitions and getting businesses ready to sell for top dollar. At K2 Business Group, one of the things that we really preach and try to really ingrain in somebody's mind, and that is tax savings. One of the most important things that you can do from a return standpoint is save money on taxes, because it's a dollar for dollar increase in the cash flow. And that could be a dollar for dollar increase in your personal lifestyle, which is immediate. But there's also this idea of getting the business, properly setting the business up for a tax efficient sale. Talk a little bit about how that happens and how the IRS can actually end up with more money in their pocket than you can in your pocket through the sale of a business.
Yeah, so when we go to sell a business prior to selling, what we want to do is sit down with the sellers and we talk to them about different ways to sell. Mm-hmm. There's basically three different structures. There's an asset sale, which most of them are done as. There's a stock or entity sale. And the other one,
great for the buyer, not so much for the seller.
Exactly. It's the pendulum, right? Mm-hmm. The asset sale is good for the buyer. Mm-hmm. The stock sale is good for the seller because 100% of the proceeds are subject to capital gains versus ordinary income. And then there's something in the middle called a Section 338H10 sale, and that's a hybrid. And understanding how those structures work is very important to maximizing your tax savings.
So let's use this as an example. Here's a business owner. It's not a huge business, but it's worth, say, $1 million. So he sells the business. You sell your business for $1 million. That's going to put you up in a pretty good high tax bracket. So let's just use the numbers 30%. I mean, just as a round number. You sell the business for $1 million. IRS gets $300,000. Mm-hmm. The buyer of the business is buying that business with after-tax dollars. So he's really had to come up with about $1.4 million, pay 30% taxes to come up with the $1 million. So the IRS gets your $300,000 from the sale of the business. He gets the pre-tax money.
Yeah.
So the IRS ends up with $600,000 or $700,000. And you only end up with $600,000. How does that happen?
You know what? When you tell me about that, it just gets me angry a little bit that the IRS, how dare them to make more money than the business owner who built that business with their blood, sweat, and tears. So what we're talking about here is very important to structure these sales properly so that we maximize the cash in the pocket of the sellers. And it can be a big difference. I was working on a transaction the other day, and just by tweaking it, just in the asset allocation and closing, we tweaked that a bit and shifted some from accounts receivable over into the entity as an entity sale, and it saved them $85,000 in taxes. It's huge.
Just in taxes.
Just in taxes, right? Yeah. And it was no different to the buyer. Didn't make any difference to the buyer, but for the seller, it was a very good thing for him. 85 grand's real money to me. I don't know about you.
Absolutely. Take a couple of hours to restructure things. Mm-hmm. You're making 40, 50 grand an hour.
Yeah.
Right?
Time well spent.
Time well spent. Guys, thanks for watching our K2 Business Group YouTube channel. Please click on the link below, like us, and subscribe. Now, the first 10 people to email us with your comments will get a free copy of Rick Krebs' book, Sell Your Business by Design, Not by Default. All you got to do is email us at info@k2businessgroup.com.